Hey guys, so this is going to be a quick introduction to futures trading, and this is for beginners. So what are futures? Futures is a contract to buy or sell at a set date and a set price, and this helps with fluctuating prices over time. And you can trade futures for commodities like gold and oil, or stock indexes like S&P 500 and the NASDAQ, which is something we'll be focused on in this video. So there's two types of ways that futures position can be settled. There's physical settled, which is if you buy a contract for oil, at the time of expiration, you'll be delivered hundreds of barrels of oil to your house. And this is something brokers tend to close before expiring. And for cash settle, if your contract is in the positive, they'll close for a net profit. And if it's in the negative, they'll close for a net negative at expiration. So futures expiration, they expire at the third Friday of every third month. And this is the months that for the next few years. So 2022, we're trading currently at the September 16th futures options. And next month, once this September passes, you'll be trading December 16th. So here, I'm currently trading the September for NASDAQ, which is U22. And once this passes, I'll be trading the next one, which is December. And they all have different values. So cash settled, brokers tend to close your contract at expiration. So if you have a swing position at September, they'll close it when it expires, or they roll over to the next month, which is December. Future sizing. So the smallest denomination for futures that you could trade is 0.25. This is one tick size, and 1 point is equivalent to 4 ticks. So for SPY, say, you could buy SPY at 400.01, 400.02, 400.03. For futures, you can only buy at 400.25, 400.5, 400.7. So it's going by that tick size. For E-mini NASDAQ, which is NQ, they move at a 20x multiplier, which is $20 per point for each contract. And for E-mini S&P 500, which is ES, it moves at $50 per point for each contract, which is a 50x multiplier. For every mini, there's a micro version, and a micro is a tenth of a mini. So if you're trading micro ES, you're trading at a 5x multiplier. An example I have, if you have 4 minis on ES, that is $200 for every point ES moves. So it moves up 5 points with 4 minis, you're up $1,000. Futures margin. So margin requirement to hold overnight or further days. I'm going to use these two brokers as a reference. So Thinkorswim has very high margin requirement, $20,000 for NASDAQ, $15,000 for ES. And Tradovate has similar requirements to hold, but it's a little bit reduced. So on top of margin to hold, you also have day and night margin, which is a reduced version, and this is for day trading, and they must be closed before the session ends. So if you're making a position and the day margin, which is 1 p.m., you must close it at 4 p.m. if you're utilizing their reduced margin requirements. So example, I have Tradovate offers $500 for ES and $1,000 NQ margin for Tradovate, which is very incredible leverage, since with the daytime margin, $1,000 is more than 16 times the initial margin to hold. So you want to understand that when you're day trading, your margin may be reduced, but you have to understand the leverage as well. You have to trade them, you have to close them before the session ends if you're utilizing their lower version margin requirements. So the advantages of futures, I'll be listing them one by one. For number one being high liquidity, instant filled all day. You could trade them at 3 a.m. and get filled at most 2 ticks above the ask price, or 2 tick range. That's very good. So you're not gonna get filled at a high range. It's gonna be a very tight range all day, any day. Number two, the futures market open 24/6, which is essentially Monday to Friday. Close at Saturday, then opens again on Sunday, and it opens 6 p.m. Eastern time to 5 p.m. close. So there's a 1 hour break that you have. Number three, so there's a tax advantage for futures trading. This is not financial advice, but there's also a 60-40 rule, which is if you say make $100,000, 60% of that would be in the long-term capital gains rate, and then 40% would be the short-term gains rate. And this is if your gains is fully for futures. So 60-40 rule is pretty good for future traders. Number four, no theta decay or high premiums. So during high volatile days, you could have high premiums when you're trading options. There's no high premiums, no theta in futures trading. You can trade them at regular trading hours, how you normally are every day, any time of the day you want, which is very good for days like when Powell speaks. Number 5, there's no PDT rule. So PDT rules is if you have under $25,000 in your account, you are not allowed to day trade. And it'll trigger that rule if you do day trade, and they'll lock your account for a certain duration. For future traders, cash settles immediately, so you're allowed to do unlimited day trade as many times as you want. Number 6, hedging and swinging. So for going back to number 4, you could swing a futures trade and not have anything affected with a theta or anything. It just be normal. And for hedging, you could have short-term trades that you have, but you could also hedge it over futures since you're not getting theta decayed or high premiums. So this is futures traders are trading is good for swings and hedging. The disadvantages of futures, I'll be going through them one by one. This is broker specific, so you can't trade them on Webull. You can trade them on Robinhood. You need a broker that allows futures or specialize in it. Number 2, commission fees adds up. This is very, very important, and I'll be going there more in depth in the future slides. Number 3, you can trade all day, anytime you want, and this often leads to temptation and impulsive trades. And just having the ability to trade at 3 a.m. could really mess up your sleep schedule. So trading futures, you would need strong discipline. So take it slow and understand futures. Number 4, strong leverage. This is very important. So with the leverage that you could have, you need to understand that with strong leverage comes greater responsibility. And if you were trading very high leverage, you could end up getting margin called and later liquidated. So you would want to understand the leverage that you're operating with. Trading time. So from when we're trading futures, we're looking more observant than just the New York session, which is 9:30 Eastern time to 4 p.m. close. We're also looking at London session, which is 3 a.m. and it closes at 11:30 a.m. And London Open, in my opinion, is half as volatile as New York Open. So at 3 a.m., we could have something similar to that 9:30 Open for New York. And same thing with Asia markets. Asia markets close at 4 a.m. Eastern time, and this overlap with the London session. And this is also the time where some brokers allow the earliest pre-market trading. Futures broker fees. So I have listed the most popular futures brokers, and I listed the E-mini fees and micro fees. So just look at the charts here. You could see TDA Thinkorswim has very high fees, commission fees. So that's something that you would want to stay away from. You want to go for the lower fees one, because fees will act up if you're day trading. And Tradovate and Interact Brokers has very low fees, and I'll be going through each and one of them. So on top of futures broker fees, you also have exchange rate fees. So the total fees includes exchange rate and the futures brokers, and this is per side. Per side means for every buy and sell. So a round trip would be 2 times the total. So for instance, one round trip of a mini on Tradovate is equivalent to the $1.35, which is the exchange rate, the 79 cents, which is the mini fee for Tradovate, and you times 2 for buy and sell, which is $4.28. So I'll be going through each brokers now. Interact Brokers has something similar to Thinkorswim/TDA. They have a volume negotiation. For TDA, you have to call them and ask for it to be lowered. For Interact Broker, it looks like it gets set automatically. So if you trade under 1,000, it's set to 0.85 per contract, which is already pretty good. And if you trade more, it'll get lowered. So higher volume, lower commission. There's also a tier-based system. So Tradovate is a very good system of this. There's the free version, which is 0.79 cents. That's the lowest that we've seen in my chart. And that's free. For the monthly plan, $100 per month, you could get it down to 0.19 cents. And if you want no commission fees whatsoever, you only want to pay the exchange rate fees, you have to pay $200 per month. And Tradovate is a very good broker. This is something I recommend. They have a very good user interface for mobile, and you also trade the web version as well. But keep in mind, Tradovate, you can't trade options or shares with it. This is future specific. Another popular choice for futures brokers, NinjaTrader. NinjaTrader is one of their older ones. The exchange rate you can see is $1.30. You have an order routing fee, and they have 3 different plans. Same thing with Tradovate. They have 3 different plans. Free version would be $1.30, $1.29. You can pay $60 a month for 99 cents per trade. And then if you want the lifetime version that they offer, it's $1,100, and it goes at 0.60 cents per contract. And this is the all-in rates per side, including the exchange rate and the commission fees. So a quick summary on this video. My recommended broker is Tradovate because it has the best margin, best commission fees, and the most versatility. And each broker that allows future trading, they usually allow you to start a demo account, and I recommend to trade the demo version and really understand the leverage that you're using for a few weeks before you actually start playing with real money. And I'm going to do a recap on how total fees for trading futures adds up each month. So example, for me, if I'm day trading 4 minis per trade size and I average 4 trades a day at $4.28, this is the number that I got from Tradovate for per mini for round trip. So 4 days, averaging 4 trades a day at this commission fee, total commission fee for 20 days, which is like nearly a month in trading days, it adds up to $1,369 in total fees monthly. So with the advantage that I gave earlier, the disadvantage is the fees that you're going. So you're exchanging the fees for no theta, no decay, tax advantages, and just all the other advantages that I listed.